morning, Trinidad and Tobago, and welcome to the Bourse Report. Well, today we're taking a look at the non-banking finance sector and first quarter results with two of those big investment stalwarts in that particular sector. And we're talking, of course, about Guardian Holdings Limited as well as ANSA Merchant Bank Limited. Now, both companies would have reported increased earnings and profitability on the heels of recovering financial markets, as well as some acquisition activity, which may be getting investors excited about the quarters and the future for both of these groups. Let's take a look first at Guardian Holdings, and for that first quarter ended March 2021, the group would have generated an earnings per share figure of 76 cents per share, which is quite a significant improvement from the 16 cents per share generated or loss per share generated in the prior comparable period of 2020. Now, net income from insurance activities actually increased around 15% from $180 million to just around $208 million over the comparable quarters. And this was driven to a large extent by the group's recent acquisition of NCB Insurance Company Limited's insurance portfolio from parent NCB Financial Group. Net income from all activities actually increased a whopping 133% from $247 million to $577 million. And that was driven by significant recoveries in net income from investment activities. Operating expenses were quite impressively sustained and remained relatively unchanged at that $309.1 million figure. And profit before taxes increased from a loss of $81.1 in the first quarter of 2020 to a gain of $215.6 million in the first quarter of 2021. Profit attributable to shareholders swung from a loss to a profit of $176.1 million. Now, when we take a look at the first quarter composition of net income for Guardian, we can see that the biggest change has been that net income from investing activities in that pinkish color, moving from a very minute gain or net income of $27 million in the first quarter of 2020 to $332 million in the first quarter of 2021, which is much more in line with the income from investing activities that Guardian has been accustomed to. And of course, that first quarter 2020 would have been significantly impacted in terms of net income from investing activities by, in the main, very volatile financial and investment markets driven by the extreme uncertainty of COVID-19 in that particular period. Now, of course, the big news for Guardian has in recent times been its cross-listing on the Jamaican Stock Exchange, which would have taken place and been made official on May the 5th, I believe, of 2021, so not too long ago. And we can see that since its announcement of that cross-listing, the price of Guardian on the Trinidad and Tobago Stock Exchange would have moved from $21.88 up to $25.51 pre-listing on the Jamaica Stock Exchange, and post-listing it would have gone up to a whopping $30.60 on average as of close of trading on Friday gone. Now, that compares actually a little bit lower to what has been experienced in terms of TT dollar equivalent on the Jamaican Stock Exchange. On the Jamaican Stock Exchange, Guardian is trading at a Trinidad and Tobago dollar equivalent of around $39.60. So quite a significant premium thus far in Jamaica. But investors should take that with a very big pinch of salt. There has been very low trading volumes on the Jamaican Stock Exchange thus far. And any significant selling pressure in Jamaica could send that price down in the near term if they were to take up all of the bids or satisfy all of the buying demand on the Jamaican Stock Exchange at this particular time. So that is certainly a development that investors will be keeping a keen eye on in the coming weeks and months ahead. At a price of $30.60 on the Trinidad and Tobago Stock Exchange, Guardian is trading at a price-earnings ratio of 7.2 times, which is still below the sector average of 10.6 times. And again, it hasn't paid a dividend for the past year, so that dividend yield is 0%, which is below the sector average of 1%. So on the basis of that recent acquisition, which seems to be paying dividends so far, figuratively, not literally as yet, stabilizing financial markets, that those cross-listing opportunities from being able to raise capital in US dollars or Jamaican dollars much more easily And of course, the lingering economic uncertainty, Bourse is going to maintain a neutral rating on Guardian. Turning quickly to ANSA Merchant Bank, and for the first quarter period, the group would have recorded an earnings per share figure of 54 cents per share, which compares quite favorably to that loss per share of 49 cents recorded in the prior comparable period. Total income was actually relatively flat, up just around 1.2% from 253 to 257 million. There was a quite measurable decline in total expenses, falling from 302 million to just around 195 million in the first quarter of 2021, a 35% decrease, with operating profits increasing from a loss of 48 million to 61 million, and ultimately profits attributable to shareholders increasing from that loss of 41 million in the first quarter of 2020 to a profit of 46.6 million in the first quarter of 2021. When we take a look at operating segment profitability, we can see that the banking sector has remained fairly stable thus far, with moving from 16.9 million in profit before taxes to 16.2 million, to a marginal decline there. We can see that the insurance services segment has had the biggest change in fortunes, moving from a loss of 62.6 million in the first quarter of 2020 to a profit of 44.9 million in the first quarter of 2021. Again, most of that change in fortune have been driven by financial valuations and their impact on the income statement. And mutual funds would have fallen, or increased rather, from a loss of 16.4 million in the first quarter of 2020 to that profit, a marginal profit of 2.2 million in the first quarter of 2021. So at a price of $41, ANSA Merchant Bank is trading at a price earnings ratio of 14 times, which is above the sector average, but still reasonable value, and offers investors a dividend yield at this point in time of 1.8%, which is above that sector average again of 1%. Now, of course, the big news for ANSA Merchant Bank, the group, would have been its acquisition and operationalization of what was formerly the Bank of Baroda commercial banking license into ANSA Bank, and that transition to, as they would put it, offer the first full service digital banking service to Trinidad and Tobago, which is anticipated, in their words, to be their competitive edge versus the other more established players in the banking sector of Trinidad and Tobago. Stabilizing financial markets should also help in the subsequent periods, but again, take that with a grain of salt. There is quite significant economic uncertainty in Trinidad and Tobago, as well as the wider Caribbean region. Well, and on that basis, we're going to maintain our neutral rating on ANSA Merchant Bank for the time being. Well, that's it for this week's edition. For more information, you can give us a call at 226-8773 or to Bourse. Email us at invest@boursefinancial.com, or check out our brand new website at bourseinvestment.com. It's much nicer, much improved, and I think investors would find it quite handy and, of course, very useful. And, of course, you can catch our article today in the Bigger, Better Business section of the Trinidad and Tobago Guardian. Until next week, be safe, social distance. This has been the Bourse Report.